Hello dear students. Security analysis and portfolio management. So now we are going to discuss about preference shares. So while studying about this SAPM subject, basically we need to know about shares. There are two major types of shares. One is equity, another one is preference shares. For this session, we are going to discuss about preference. So preference shares or preferred shares, we can also say as preferred shares. So it is a type of security where it has a characteristics to both, similar to both common shares and a fixed income security. See, preference shareholders or preference shares, whenever a share is releasing to third parties, that is to general public, whoever is willing to buy that shares, so those individuals become preference shareholders of a company. Clear? So it has a major feature like it is hybrid in nature, which means it represents the characteristics of both debt and equity investments. Okay, so one major point that we need to keep in our mind, that is fixed income security. So we need not to worry about the dividend. So definitely we'll be getting this preference shareholders, definitely they'll be getting the dividend at the fixed time interval. Okay, so whenever company is gaining a profit, so based on that, dividends will be equally distributed to all the different preference shareholders. Next, so features. So the investors are paid fixed rate dividends. That is why I told you like fixed rate dividends. Okay, so whichever, based on their number of shares the shareholder he or she is holding, so they can able to get the fixed rate of interest, I mean dividends. Okay, irrespective of the company's revenue earnings. So whatever dividend that the company is promised to pay to the shareholders, definitely it doesn't depends upon the revenue, whether the company is gaining or not, profit high or low, less, that doesn't matter. Okay, one thing that we the preference shareholders that they gain is something that fixed rate. Okay, next is what? Dividends are paid to shareholders prior to the issuance of common stock dividends, which means, see, first priority gives to this preference shareholders than the equity shareholders. That is why it is mentioned here as prior. Okay, next, in the event of liquidation of the company, okay, so their claims on the assets of the firm are also fixed. So in case the company if it is what liquidating, at that stage also all the claims, okay, of the different assets of the company can be done by the preference shareholders. So that is what a fixed one. So that is why it is highly safe. Okay, that is why where the preference shareholders, they're actually getting fixed rate of dividends. Okay, do not enjoy any voting powers. But one major thing, whereas in equity shares, equity shareholders, they'll be having that right to vote. But here for preference shareholders, so they won't participate in any general body meetings. They are not having any rights to vote. Okay, so that is what the major difference between equity and preference. Next, so advantages and disadvantages of preference shares. So first let us deal all the advantages. So appeal to caution investors. So something that so whenever an investor is ready to invest in any of the securities, probably he is aiming for gain some huge return in the future. So that investor will preferably choose this preference shares. Okay, so why? Because again, because of this fixed rate of dividend. So no charge on assets, no burden on profits. Yes, that is true. No interference in the management, trading on equity, and then flexibility. Coming here, disadvantages: limited appeal, fixed liability, and then lack of voting rights, which we already discussed. And next is fearing of showing the doubt. So yes, it has both merits and demerits. So these are all the advantages and disadvantages of preference shares. Thank you.